How's it going, everybody? Welcome back to the channel. I hope you're all having a great day. My name is Gev. It's Tuesday, June 16th, so let's talk capital. Alright, so before we go ahead and jump into the charts here, let's go ahead and jump into some of the news that came down today. Price action wise, markets are kind of slow. They're still trying to figure out the general trend if we want to continue higher or not. But what's interesting is in the news today. So Jerome Powell did an interview today. Jerome Powell is the chair of the Federal Reserve. He did an interview today where basically he went over what he expects for the next couple years as far as the market goes and how he expects the economy to recover. And yet we have some juicy takeaways from the interview. And this right here is it. Before I go into it, guys, I get all my news from Forex Factory. I don't watch the news really. I get all my news from Forex Factory. Okay, so it's the most accurate source of information, and it's not like laid out in a partisan manner. It's just laid out in a factual manner, and you just read it and you understand what's going on. So if you guys want to know what I'm looking at as far as news goes, check out forexfactory.com. Okay, now it's not a plug. Just telling you guys where to go. So basically, first takeaway here is the Fed Powell. Okay, so Jerome Powell said that there seems to be plenty of demand for U.S. debt. What does that mean? That means people across the world, countries and other entities are buying United States bonds. Okay, now, if that was true, then why the hell is the Fed also stepping in and buying the bonds that they issue themselves, right? Kind of misleading to say if there's high demand or there seems plenty of demand for U.S. debt, then why the hell are you buying your own, right? Second takeaway, Fed's Powell asked the Fed monetizing Treasury debt, says that's certainly not our intention, adding we really don't think about that. Says he sees plenty of demand for Treasury beyond the Fed. So, key takeaways from that statement, that's certainly not our intention. What does that mean? That means we don't want to do that, but it's happening and we're not going to really stop it. That's what he's trying to tell you. It's not really our intention to do it, but we know it's happening and we're not really going to stop it. We don't really think about that. Yeah. Man, I love it when these guys drive markets, right? This is it. He's behind the steering wheel right now, and he's driving the shit out of the market. And I'm gonna show you guys on the chart right now in a second. Another one. Fed's Powell in the Q&A. Even if workers return to jobs really fast, still going to be a lot of unemployment, particularly in tourism, travel, and other services. More unemployment support likely to be needed. Okay, what he's saying there is basically, even if we do get a historic return of jobs like Trump says we will, we're not going to get it in these sectors, number one. Number two, we're going to need more unemployment support, meaning that extra $600 boost that is currently happening because of COVID is most likely going to need to continue if we don't want to see a significant downturn. Okay? Fed's Powell, the Fed Treasury buying is entirely about the market functioning. This is by far, if I can highlight anything, if I can circle anything, if I can point this shit out to you guys in a more dramatic fashion where it pops out at you, this statement right here is it. Fed's Powell, the Fed Treasury buying is entirely about the market functioning. Let that sink in, guys. He's telling you the reason why they are doing the things that they are doing is because the underlying market, the underlying economy is not functioning how it should be. Okay, this is why they're performing the actions that they are. This means that without the Fed, we would be historically screwed right now. Historically. So when I come out and I tell you guys this is a Fed's rally, this is what I mean. That means real money is not behind this shit. This is them printing money, inflating their asset class, inflating the assets that they're involved in, inflating their buddies' companies so that they don't go in the direction that they're really supposed to. In other words, the Fed is the market functioning. That's terrible, terrible. And last, the Fed is probably some years from halting asset purchases. This dude didn't even want to give a timetable. He didn't even say a couple because couple implies two, right? He said some years, as in a broad range of years. Could be 2 years, could be 5 years. It could all and well be an eternity. This is by far the most damaging crap I've ever heard the Fed spew about the market in my entire life. This is literally them blatantly, and obviously not as blatantly as the word blatantly implies, but this is as obvious as it can get for them telling us that the market isn't working properly without them coming out and outright saying, yeah, the market's not working properly. Okay, now, if we take all that information, we come back here and we apply it into these charts, two things are apparent. S&P 500 is an up channel, as clearly defined here. We have a low, we have a higher low, we have a higher low, we have a higher low. Clearly defined. It's not even arguable, right? We have a higher high, we have a high, we have a higher high, higher high, higher high. Up channel still intact, we got the bounce, right? But I need you guys to understand how they step in at the most opportune times, okay? As you can see, they came in here and held the rally going, right? Now we have to see if we can continue higher. This is the real question, because now we're in some really big overhead resistance, right? We're hitting this trend, this trend line that we were above briefly here, that also held the support for mega rallies here starting in 2019, June 2019. Okay, so we're battling with that right now, and we're also battling with the daily 21 moving average, right? And if we go up to the 3-day chart here, it does start to look slightly better. We did hold the 21 moving average on the 3-day, and on the weekly also we are currently holding it. So this is looking very good. Fed is doing their job. They're driving the car in the correct direction. We're looking like all that stimulation is going to help. Okay. Why have I not entered long then, right? That's the question that you should be asking. Here's the situation, guys. I honestly do not feel comfortable longing the S&P 500. Yes, the chart's telling me I probably should. Yes, the Fed is telling me I definitely should. I don't know how to put this into words so it can be understood. When we have 13+% unemployment, when we have a government and a president who's willingly and blatantly admitting that they're manipulating the markets, I don't really want to be involved in that unless I can get 100% plays. What do I mean by that? 100% plays, a break of an all-time high, and then a retest. Okay, this is not a 100% play. Someone can do a rug pull here and pull the market out. Yes, should we have longed here? Absolutely, 100%. Did I feel comfortable doing it? No, not with the current market conditions, not with the current market situations. I just didn't feel comfortable doing it. Okay, and the first reason is what I just told you, and the second reason why I didn't feel comfortable doing it is for one simple reason. We broke the 200-day moving average, and we broke our channel, and it was looking like it was a rug pull. Okay, I'm not about to step in and catch a falling knife. Okay, and the problem here is if you wait for the close like we did, well, the market already ran away from us. I'm not trying to long this thing at 3,060. No, I'm trying to get in at the bottom here. We couldn't get in on the bottom, so we're just going to let it ride now. We're going to see how high it can go, or if it's going to be a rug pull. Okay, that's the S&P 500. And then if you guys can see, most of the companies, most of the major players are in the green, with a couple being in the red, but most of them are in the green. So now if we go over to gold, gold again reacting to the monetary policies of the Fed, rallying nicely on the 3-day. We got a nice rejection candle here, and then if we move down to the daily, still holding the daily 50 moving average, looking to get above. Remember, I told you guys in yesterday's video, 1745 is our number here. If we can get above 1745 with a nice solid daily close, we're looking very bullish. Until then, still sideline, guys, still sideline. Can't be playing that. Okay, Bitcoin, looking at daily chart, we broke out of that we broke out of the triangle formation slightly. Actually, we got to go ahead and move this. So this level, and I know most people are going to hate this, but it is what it is. Sorry about this, guys. We're going to move this down slightly to right there. Okay, so we're in a ascending wedge, ascending triangle, however you want to call this, right? So we broke below briefly and then closed above. What's important about this is three things. Number one, we broke below, did not sustain the bearish price action. That's good. Number two, we bounced off of our 3-year downtrend perfectly. Okay. Number four is we closed above, with a body above the 50 daily moving average. So now it's about bulls taking control of the market. Okay, because we've seen bears fail now. This was a bearish break that failed. So this is literally wide open chance for bulls to take complete control of the market. If they do not seize this opportunity, Bitcoin will be in trouble. And this is why I told you guys 9250 was my line in the sand, and I'm exiting. And I exited. Now I'm waiting to see if bulls can continue to hold support and move higher. If they cannot, well, we know where we're going. If they do 10,000, 10,050 right now is the number to watch. If we can close above 10,050, we're going to see a solid move back into this channel, obviously, and to the higher end of the channel around 11,600. Okay, so that's basically what we're looking at today. I hope you guys enjoyed the video. If you did, please leave a like, please subscribe, take that notification bell. If you didn't, leave a dislike. Let me know what you didn't like. Everyone, leave a comment. Let me know what you guys think. What do you think the markets are heading? How do you think we see the next couple weeks, days, months, or possibly even years, right? According to Mr. Fed, Jerome Powell, real quick before I end the video, historic, some years away. We might be some years away from a lot of things. All right, guys, with that, I leave you. Have a good day. Peace out.